Welcome to the CNBC Financial Advisor Summit, where the best in the industry are sharing best practices and how they're servicing the complex needs of clients. My name is Joya, and today we are focusing on this session on risk. How do we manage it? How do we evaluate it? And joining me today are Judith Casasampere and John Seeberg, both of whom are sales representatives with Interactive Brokers. Welcome. And we want to make sure that we advise the audience that we want you to send in your questions. We're going to integrate as many of them as we can throughout the session. All you've got to do is put them in right here in this session function where I'm seeing a lot of you chatting already. John, I'm going to start with you, and I understand that your answers today are really a culmination of you having surveyed all of your advisors across the board at Interactive Brokers, but we are 13 days away from the election. How are your advisors now positioning client portfolios to position themselves against the election?
Thanks, Joy. Nice to be with you. So my advisors on the whole are obviously have more in cash. They're a little bit defensive. They're spending this relatively quiet time focusing on the next moves. What's the next rotation? Is it from growth to risk? Will it be, how am I approaching my clients from a risk perspective? Am I looking at their profiles? Am I meeting with them? Am I looking at my estate planning with potential tax changes coming? So they're a little bit defensive, but thinking about the next rotation, hopefully using technology.
Yeah, and so Judith, that's a great jumping off point because I know that your practice style is very much technology driven. Can you talk a little bit more about that?
Yes, so realistically, those portfolios that the advisors have to be rebalancing. So the advisors have to be rebalancing those portfolios and making them adjusted to the elections. Therefore, the flexibility that we can add through our rebalancing tools and through the technology that Interactive Brokers provides to directly access the markets, that's really an important part of our services to our advisors, to create those portfolios, to rebalance those portfolios, and to add flexibility.
Can you talk a little bit about what your particular outlook is for your clients right now?
Yes, obviously our clients, meaning our advisors that are servicing their clients. So they do have to service clients with different goals. So they have clients with long-term goals and medium-term goals. And actually, right now, due to the different circumstances that everybody is living in, they have actually to readjust as well their liquidity needs. And they actually, at some point, there is also need of margin lending and taking advantage of low financing fees as well with the portfolios that the clients have, and then being able to also use that money for other investments and other situations right now.
John, what are some of your advisors telling you when they are sitting down to evaluate risk?
They basically want to understand risk in terms of costs, in terms of how to reduce them. And what I mean by cost is what the next volatile period will bring. They use technology to understand the risk profile of a client, how to reduce that risk, and what they're going to tell them when the next rotation comes, when the next volatile session comes. So they want to understand risk profiles. They want to understand custodian risk. It's a big risk. How do I reduce the risk of my custodian selling against me? Will the custodian be able to pivot in terms of technology when the next volatile period comes? And as custodians consolidate, will they provide the service I need to be the best I can be to my clients?
And you're using a range of analytical tools, right? Some more sophisticated risk tools.
Yes. Go ahead.
Go ahead, Judith.
So yes, we do have a tool that's, for instance, the Risk Navigator. And the Risk Navigator, what it has is the possibility for the advisor to be able to see their portfolios and see, for instance, the different sectors where the portfolios is being allocated, the different countries where the portfolios are being allocated, and also to see the changes on the volatility in the market compared to how it is going to impact on their portfolios.
And Judith, you're also creating models based on different types of assets, different kinds of currency, the risk appetite. Your advisors are, I should say, risk appetite of different clients. Can you speak to that?
Yes, so because the global offering of Interactive Brokers, we do have 135 markets worldwide and 35 countries. So the advisor is able to put on the same portfolios and evaluate, as you say, the risks. So we do have fundamental research. We have scanners that allow the advisors to put parameters on the different markets that they want to scan, and then be able to define which are the best in class to put on those portfolios, and then evaluate and backtest how those portfolios would perform.
John, Judith, just teed up the global investment and the breadth and depth of products that you offer. How important of a part is that going to be playing with your advisors?
Well, we attract a global perspective, a global advisor group. In the U.S., I'll focus on the U.S., it adds alpha and diversification. And an advisor in the U.S. can invite in a manager through our marketplace, let's say, or they hire an investment manager that has an exposure to futures or options. So they can use a platform to expand their portfolio choices when they meet with their clients, go through the risk profiles. They can use a manager that has exposure to something that might improve their ability to manage and retain clients, really.
Judith, I'm going to bring this back to the tools and technology piece, because I know that's such a big part of the ethos at Interactive Brokers. You're scanning the market movements as well, and I can't imagine that we've been in a much more volatile time as we have been in these last few months. How are advisors using some of these tools in order to be successful?
So in order to be successful, what the advisors can do is they can customize their scenarios. So an advisor, what they do is they take their portfolio, and then they can change what is going to be Apple doing, what is going to be the volatility, and then be able to see how is this going to impact the overall portfolio that they hold for their clients, and actually present that to the client per se. So then, but then that brings up to what we were talking before. Right now, the advisors need to communicate a lot with the clients. The circumstances are changing. The communication is vital. So there are different model portfolios that they rebalance frequently, but then there are also aggressive growth kind of advisors that are going to be needing to speak to the clients daily and make them understand the strategy.
I want to advise those folks that are listening in today to please send in our questions in the chat function that sits on the right here. We'd love to be able to include that in our conversation today. Judith, we're an aging population, we're a baby boomer population, and not necessarily everybody loves technology. So, what is your advice for those who maybe are shying away or being forced now to be able to, deal with technology in a way they haven't had to before?
Yes, it's important, and it's really important that everybody is getting familiarized with the technology. It's important as well that we take precautions. At the beginning of the session today, the first presenter, the first interviewer, the SEC gentleman, he was saying that the cyber hygiene, the cyber security is really important. At Interactive Brokers, for instance, all our clients have their username, their password, and they also have a two-factor authentication in order to be able to prove themselves to us, even through the mobile, so to be able to authenticate and enter the accounts. So the clients are secure in their environments, and they are trusting that the monies that they have on this cyber world that we live right now.
John, if someone wants to monitor their portfolio and just get a complete overview and analysis, how are your advisors kind of walking your clients through that process?
So through the use of technology, and again, looking at the custodian, it's an important piece. Our portfolio analyst is a wonderful tool for when you have your quarterly or even monthly planning sessions. So the ability to bring in all asset classes, other accounts from other brokers, your credit cards, your investment in real estate in a holistic platform. And again, look to the custodian for that. Why pay Tamarack or InvestNet for that when the custodian can offer that for free? And using those planning tools really helps the advisor communicate well with the client.
And in this environment, everybody's fee sensitive as well. So can you speak to the advisor fees on active versus passive managed portfolios, and given the different risk profiles?
Yes.
Well, go ahead, Judith. Yeah.
No, please. No, this is your turn.
Basically, looking at a passive advisor and the fees that seem so attractive is interesting, but in times of volatility, the client really needs to lean on their advisor and the personal touches, and again, reviewing the portfolios, reviewing the risk assessment, and having those tools at the ready and those answers at the ready is a really important thing in this. One of the biggest things my advisors tell me is, how do I look to the future of costs? How can I reduce them? Can I look to my custodian for that? how will I get technology from my custodian? And that's an important question, because that technology answer gets a better yield for the client. Better technology, lower cost, gets a better yield for that advisor handling the client.
Where are your advisors finding income for clients' portfolios given the low interest rate environment? Judith, I'll put that question to you.
That's good. That's a really good question. The interactive brokers, for instance, the yield is being found sometimes based on as we were saying, on fixed income that we would have. They would be able to scan different markets, and they will be able to see on corporate bonds, on agency bonds, on municipal bonds, and find those best in class there. But also from the portfolios that they hold, we do have this stock yield enhancement program. Whereas if interactive brokers lend shares out in the marketplace, then we would share whatever we receive as this income for lending those shares with the advisor client. So this also generates income for the advisor that advisor and advisor client that it's holding their portfolios at interactive brokers. And going back to Going back to the point about the fees, I've been surveying also our advisors, and then there is from these robo advisors that they would charge, let's say 50 or even less basis points on a client assets that they hold, up all the way till 1.5% or 150 basis points on an annualized basis from an advisor that really it's acting and it's being like a hedge fund as well, with the separate managed accounts that they hold at interactive brokers, and they rotate constantly. So there is a really wide range from the active to the passive advisory fees.
We have a question coming in from Richard Conrad, and we welcome those of you that are joining the session today. Please put in your questions in the session chat function, which sits on the right. Richard asks, our usual approach to getting uncorrelated returns has been investment grade bonds. With negligible yields, our usual means of risk reduction provides very little downside protection. How do I optimize risk-adjusted returns given the current yields?
It's a very specific question, Richard. Thanks for it. I guess I would give you to the marketplace of our advisors, and they can walk you through how they would handle that question. It's a great question, and we think that bonds and the access to bonds are an important part of our platform. I think there's a lot of strategies our advisors use, risk overlays with options. But to Judith's point a minute ago, to start at a lower fee-based, a lower fee experience gives the opportunity for the RIA to have a better chance at making those yields, whatever overlay they choose.
Right. Also, going back to this environment as well, having global investments, having the possibility to have global investments also would allow to chase other yields coming from other parts of the world, where the diversifying will also be able to add more yields to the portfolios of the clients.
This next question is equity focused. You know, the FANG stocks have contributed disproportionately to the market's rise. What are your advisors' thoughts right now on how clients should be allocated towards them? John, do you want to take that?
They're doing option overlay strategies to protect the gains they've had in place. They're also planning for the future, looking at, again, spending this quiet time to look at risk returns in the future, using some of the risk technology we have, and trying to understand what the next rotation will be for them, and can plan out those scenarios so when those rotations are forced upon the marketplace, they'll be able to use the tools we have and the global access.
We're coming down to our last few minutes here. I want to ask you, is there something that I haven't covered off on that you're seeing day to day with your advisors that you want to be able to share with this group today?
I would say that having the chance, as we said, just in order to add a new piece of information. So having the chance to evaluate the portfolios and see, let's say, this value at risk, and see a what if scenario, and going back to what John was saying, that adding options and being covered calls on a portfolio that it's already making some money, but then you want to be protected on the downside risk. So all these tools on our risk navigator are available for the advisors to use and to present to their clients. So that's an important part.
John, any thoughts on that?
I would add, basically, look at the custodian and what they're offering. And with the shift in the marketplace, especially with some of the bigger players, TD and Schwab trade, we call it, look at what the custodian is doing to keep you ahead. how are they helping you pivot your business? Technology is going to be such an important part of the business. And I would say a lot of my advisors are concerned about that because that will get them in a better place to handle clients that are wanting the technology experience, but also older clients to bring them along. And the portal is important.
What is your preferred method of communicating with clients? I know that technology is a big piece, Judith, of your company's ethos and the way that you engage in your day-to-day activities. But how are you communicating with your client base? Or how are advisors, I should say, communicating with your client base?
So advisors do have, as of today, advisors do communicate with clients with virtual meetings. So they do have virtual meetings with the clients, but also on a day-to-day basis, advisors send to the clients kind of a snapshots on the market, on what the market has been doing, what the possibilities that they've been taking advantage by routing the orders into the market and maybe using some algorithms to get into the market in a slower pace or in a faster pace to get the best execution. Another important thing that how they communicate is obviously via emails and via research that they can also find. So there is a fundamental kind of environment as well that with analyst research and with market contributors and with traders insights that we provide as well to our advisors, so they can also communicate all this kind of market information to the clients as well.
And what is the genesis of the Trader Insights? Where is that all coming from? John, I'll send that one to you.
It's generated internally, but we've got providers that provide insight to this. And we've holistically garnered a bunch of research providers into one platform. Often my RIAs will tell me places like Refinitiv and places like Vanguard have inputs to our systems, and that gives them a great planning tool. But then on the insight side, we think we might develop that more because it gives another channel for an advisor to pick up and say, here's what my custodian is doing, here's what the marketplace of ideas are saying. So it's a marketplace for ideas. We think it has more development to do.
Absolutely. I want to finish this up here in a few minutes and open this up to questions. I see a lot of you are entering our session and enjoying a conversation and networking with each other. We invite you to ask us questions, and I'll be culling them from the session chat that sits on the right and pose them to our guests today. For anybody who is, really thinking about, Judith, you and I were talking about this, earlier. If anybody's looking to international assets and they really don't know where to start, how are you advising somebody that has that lens but doesn't know where to begin?
So there is all the tools that have reference to the scanners. So there are scanners and there is a marketplace, but there are scanners mainly where you can go and search from the global stocks, which ones fit your parameters, from the yields, as the gentleman was asking us. So you can say, I would like to have bonds expiring from 2030 to 2035, and I would like that they have this certain yields or this certain kind of rating, and find out of the global spectrum of markets where Interactive Brokers provide you access to that. But not only that, there is also all these criteria that also other panelists and on the concurrent sessions are doing, which is the ESG. So at Interactive Brokers, we also have all these ESG different parameters and criteria that the advisors can build the portfolios based on all these different criteria and specify what they want to find and to fulfill what the client they want to sell on their portfolios to the clients.
John, we started this by saying that the summit is really about sharing best practices across the board from some of the best in the industry. What are some of the best practices that you're observing or your advisors are observing at Interactive Brokers?
So again, it's using technology to get to a better price point, and the practices they use is taking advantage of that technology and making sure clients understand that there is an outlet for margin that's really inexpensive. So if they've got a subset of clients that are real estate oriented, turn them on to what we offer in terms of interest rate margin for easy borrowing and excess income from stock yield enhancement that Judith mentioned. So they're really driving the client to understand it's a better proposition, and based on that, it's another way to enhance their yield as a practice.
Judith, I think you have some thoughts on this as well.
Yes, I think that also the best practices as well. For instance, there is these client risk questionnaires that the advisors present to the clients in order for the clients to evaluate themselves on their profiles and on their goals and all these things. Especially nowadays, it's good that the advisors also make the clients reshuffle all these risk scores and see what would be the best portfolio to match those risk scores based on that. But I also have advisors that they have mentioned to me. The clients are not true to themselves, so the clients are sometimes answering on a whatever they know that it's more safe or more standardized answers, but really they don't really are true to what they actually expect from the market, or what they actually expect from the portfolios, how they need to behave.
This is an emotional time for a lot of people. A lot of people, are monitoring their portfolios, and they're not liking what they see. So from the emotional standpoint, because at the end of the day, sometimes a lot of advisors end up feeling like they're on the front lines of those emotions. How do you handle that piece of the business, John? How do your advisors deal with that?
So they, again, produce a lot of, the technology we provide produces a lot of research and attention to detail that they can share with clients. But holistically, at the end of the day, you can talk all day about ESG and how make this portfolio align with a client's interests, but it's really the hand-holding and the ability to say, here is what we are doing, here is the presentation of a free reporting that we offer, so the clients can see what they're actually doing. So it talks them down in those volatile times.
We want to remind those that are just joining. I see Michael Breen is just joining us. If you have a moment and you have some questions, we would love for you to be able to put those to our guests today, Judith Casasampere and John Seeberg from Interactive Brokers. We are talking about risk, how to manage it, how to evaluate it, and we are speaking to some of the best in the industry on this topic. Judith, what haven't we talked about yet? From where you sit in West Palm Beach, what haven't we talked about yet?
I think that we haven't talked enough about the different let's say, with the products that you can put on a portfolio. For instance, all these ETFs. So an ETF, it's whatever the lowest cost possible, let's say, in order to access a broader diversification on the portfolios. So ETFs are some of the most used products by the advisors as well. So having a good set of different model portfolios, even coming from leading institutions, and being able to build those portfolios with ETFs that are fixed income, alternative investments, and making a good combination, it's also something that advisors take advantage of. And we have talked about equities, we have talked about bonds, or maybe mutual funds, but still the ETFs is one of the most the most investment tools that we use as well for advisors.
John, at the high end and at the low end of risk, since we're focusing on that today, for those of you that are just joining, what are your advisors really liking at the high end of risk, and what are your advisors liking at the low end of risk?
Low end of risk is basically obviously bonds and some of the option overlays they can do to keep their risk contained. But there's also a lot of opportunities in emerging markets. So access to the actual share markets. As much as Judith's point is accurate, we love ETFs as a general tool to go to the actual markets and go to the share markets themselves and invest directly is a real advantage. And sometimes it's a little more risky. It's a little bit higher on the risk profile. And some investors are open to that. If their risk profile opens them to that, they have an advisor, they can use IB to get to those marketplaces.
John, you collect insights from a lot of different sources, but how do you provide that transparency? How do your advisors provide that transparency for clients who are looking abroad and looking to those emerging markets?
Well, again, if the advisor themselves don't have the expertise, there's a marketplace they can turn to for other money managers. And our chairman started this company with the idea of transparency, to bring a lower price point, to bring a better price point, better technology, to bring better terms all across. So that transparency is really important to us. So again, I remind the RAs to look at their custodians and what they're doing. Are they competing against them in terms of asset allocation, in terms of product? We are transparent in terms of what we show in product, and it's global. It's a global look.
Mike Mooney asks, do you have any general thoughts, going back to bonds, on bond proxies or alternatives for yield? We're talking about REITs, real estate, indexed annuities, etc.
we basically only cover investable products that are accessible online or accessible in electronic markets. So there are some risk analysis tools we have that can compare asset classes, but we're basically tied to markets that are online, and that's the expertise we bring. In the marketplace, again, I'll mention there are money managers and RIAs that have expertise that bring that extra perspective.
Judith, any thoughts on the REITs, real estate indexed annuity?
Yeah. Yes, as John said, so the REITs, for instance, everything that is exchange listed, we are able to offer. So everything that it has a market quote, and that we can look for the best available price for the advisor, and that's another thing. All the portfolios that the clients have at Interactive Brokers, managed by their advisors, they have a real-time mark to market of their P&Ls, of their values. So this is one of the important things that we offer. So realistically, in anywhere in the world where the client have an asset, it has a value, and the advisor also can be really quick in readjusting those portfolios, because he can see what's the P&L that a certain stock is adding to the portfolio or not, and cut the losses, or sell options or covered calls on those as well. Yes.
All right, Judith, we're going to leave it there. That's Judith Casasampere and John Seeberg, sales representatives with Interactive Brokers. Of course, we have a full day of programming for you at the CNBC Financial Advisor Summit today. Thank you for joining. Please click on the sessions button to your left to select your next session, and we'll see you soon.